We are live. Good morning, everybody. Happy Thursday. Not a great start to the day in terms of the market. We'll get to that. We are down again overnight, pointing lower at the open. We'll talk about that. We'll talk about yesterday. We'll try to digest it. Try to make sense of all this. But do you have some stocks to talk about? Individual stocks, but also just overall market, because I know there's a lot of anxiety out there. So we'll do our best to try to quell that anxiety if we can. Good morning, everyone in the chat. Good morning, Earl. Good morning, Beans and Rice for me. I haven't seen you before. Good morning, Beans and Rice for me. What's up, EKS, OBJ? How's everyone doing? We're going to get started here. Ivan Feinseth and Peter Tuchman are today's guests. Ivan Feinseth at 8:35. He's from Tigress Financial Partners. Peter Tuchman at 9 o'clock. He is the Einstein of Wall Street. So let's get started. Smash that like button. Here we go. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Let's get the crew on here. There's Joel. There's Dennis. Good morning. Good morning. How's everyone doing today?
We're doing good. We're doing good. We're going to turn all those frowns upside down today.
Good.
We're
Be
gonna
hard
start-
on me. Team lost 9-6.
Oh, Dennis, I'm
feeling
sorry.
sick.
Oh, I'm so
We
sorry.
didn't even get that in the pre-market
Wait,
show.
I
It's
saw
going to be a
highlights.
tough.
I
tough
saw
to
the
turn my
highlights this
frown
morning,
upside down.
9-6. What happened last night, man?
No goaltending on either team.
9-6.
Goaltending was optional.
Hey, I'm sorry.
That's all we'll say is nobody can make a save. Neither
Brutal.
9-6.
9-6, yes. A lot of goals.
Anyway,
Throwback
Okay.
to the 80s.
Okay. All right. So we got to lighten the mood. We're going to start with the dad joke of the day.
okay. What do we
And
got?
dads love looking at the family pet and saying, "Okay, you're in charge while we're gone."
Yeah,
Okay.
yeah, I like
I
that.
do that.
I like
Yeah.
that.
I don't have
Okay.
a family pet, but I would do that if I had one.
So who's in charge while you're gone?
I don't know.
No one.
He doesn't go anywhere.
I don't go anywhere.
So, and we're going to be optimistic about the market after the total whatever yesterday. And we have a level. That's all we can do is we can give you levels. The low last Thursday was 38.55, and if you had a bid out there at 38.55 last night, you got a big ND. Nothing done. We went to 56. We got a little bit of a rebound now, 30 handles above that, but that just looks like a bullseye on the downside, a target to hit. After that, you can look at the bottom right chart. There's the monthlies. There's not a lot there, but for now, we have support, and I'd call resistance. I'm sure a lot of people would like to see the SPOOs or their stocks green today, and that's way up at 39.2275. Crude, a 2-day $10 move down. We're down $1.24 at 105.80. Gold perking up just a tad here. It's up $12, 18.2790. Silver the same, up 17 cents, 21.72. Bitcoin, just trying to decide what to do here at 30K, up $230 at 29,415. And Ethereum futures, they're down $21 and 1956 and a half. So little general market talk on Triple D. You made a statement yesterday that rung true throughout Wall Street. And you said if they're hitting target,
They're going to hit everything.
look out.
Mm-hmm. I mean, they went for the conservative stuff. The safety trade is what they attacked yesterday. We have warned about this for months on the show that eventually they will come for the safety trade if it gets ugly enough. They came yesterday and they took no prisoners. I mean, stocks like Procter & Gamble trade down 7%. Costco losing $60 on the day. They didn't even say anything. It was all Target's fault. You can look and say, oh, wow, there was some Fed speak, trying to find a macro headline. Don't look any farther than Target. When you have a stock that is a conservative staple with a lower beta fall 25% in one day, everybody says, no, none of my stocks are safe. And they started selling all of the safety stocks. And it was a value wreck. And I mean big time. So obviously we've already had the growth wreck. Those stocks held up okay yesterday.
Yeah, it's interesting.
ARKK well off the low still.
Yeah.
So that low is still holding for those stocks. But
Ooh.
it was the other stocks, the staples, that they just hammered, the Coca-Colas, the Procter & Gamble's, the Costco's, ugly with a capital U.
Let's stop at ARC here for just 1 second. I mean, when's ARC done this?
It has done in the past.
4 days in a
It
row
often
like
does
this?
do that. Yeah, it often does do 3-4 days, little consolidation.
Look
Is
at
it
that.
consolidation to go higher or lower? That's to be determined. And to think with the overall market, it's going to go lower. But like I said, they were just oversold last Thursday. We're a week later, and we're still we're holding up well. So far, so good for Kathy.
Look at that.
Not so far, so good for Warren. He broke down yesterday. Value trade coming off. So they are hitting the stuff that hasn't been hit. Two sectors that haven't been hit hard yet: utilities and healthcare.
I saw you tweet this yesterday. You said they're coming for the utilities next. You may be right.
I would sell if I had any utility stocks and I was hiding. I thought utility was a cash equivalent. You need to learn from yesterday. Consumer staples were not a cash equivalent. Utilities will not be a cash equivalent either. They're not cash. They are stocks. There's people hiding there, and they are expensive relative to themselves. If I owned any utility stocks, I would sell them as fast as I possibly could. That is just my opinion, but I think the utility stocks may eventually look like the consumer staples. No hiding in a bear market.
No.
Hiding in US dollars. That is the safety trade if you really want a true safety trade. If we turn around, market starts rallying, maybe they won't come for that stuff. But I mean, put it in perspective. The XLU, you've got a rising interest rate environment, and the XLU is up on the year. I mean, doesn't sound, normal to me. You've got stocks like Southern, SO, that have went from $55 a year and a half ago to $75. Dividend's still basically the same thing, 3.66, but is a 3.66 dividend that good? Like I said, my banker called me. 1 year, Canadian GICs are now 3%. That's guaranteed by the government. 3.66% of utility, I'll take the government over the utility yield right now. So there's competition. The Tina trade is no longer out there. There is alternatives, and that is not good news for stocks.
And I know you meant, I'm sorry, go ahead, Joel.
No, I just like the utility thing is like we just kept on asking, saying, why? And then now we know why. I'll see. We'll just real quick to CXLU. I mean, it's been bumping up against some resistance here. I'll just use that as a general barometer. And I mean, you got a trading range. You hit the top of this, got a trading range too, 70 to like 72. So still up there on a relative base. What Spencer, what were you gonna add?
Well, this is a good comment from EKS in the chat. Utilities, the companies, right? They do have pricing power. They are a defensive sector, and they are going to fare fine in a recession, like the businesses will. But that does not mean the stocks are immune. They're not.
That's what I'm trying to say.
Right.
Yeah. Are they going to fall 50, 60%? If they start falling 50, 60%, we got major problems. So, but could there be a 10% correction in utilities coming? The things are crowded. People are hiding there. Money managers are hiding there. We saw what happened to the money managers who were hiding in the Coca-Colas and the Procter & Gamble's. Procter & Gamble didn't do anything wrong yesterday. They have pricing power. They're passing it through. Look what happened.
Does anyone know, does Procter & Gamble own Old Spice? Because I bought some deodorant last. I just stopped at CVS. $8 for a stick of Old Spice. $8. I couldn't believe it.
That's pricing power. They pushed it through.
I couldn't believe
You're going to see them pushing it through. Certain
Yeah.
companies don't have pricing power. Those are the ones you definitely don't want to own. It's tough to like. It was nice to be bullish for a few days. The growth names are still holding up. So I'll say innocent until proven guilty because they have not made new lows. S&P did bounce off the low, Joel. trying to hold overnight, like you said, but it just feels like it's inevitable that we are going into the official bear market and there's no stopping it.
You know what? I know you mentioned ARK, but you know what else is weirdly holding up is there's a lot of these
Junk.
stocks that are like
Yep.
just down 80% or something like that. They're actually holding up okay. And I'm
know.
Very
not
well.
saying I'm not saying go buy them. I'm really not. But if you look at things like Roblox or like here's one, former SPAC, Joby Aviation, JOBY, having a nice week, really.
How about Rocket? I mentioned
right?
Rocket.
RKT, right? Not doing so bad the last week or so. And I'm not saying go hide in these stocks right now, but
There's seller exhaustion in
Yeah.
those names. That's what
No one
that's what
left
I
to
was
sell.
calling last Thursday. There's seller exhaustion in the growth names. They may have seen their short-term lows, but if the
yeah.
overall
Yeah.
if the overall market starts getting hit, who knows? But there's no seller exhaustion in the Costco's and stuff. They're just like, and that's why they're starting to get hit hard. I mean, does it make sense that they're hitting Costco? I think eventually you're going to get an awesome buying opportunity in a lot of good companies here. But right now, when we're just approaching the lows again,
Yeah.
this could still get really ugly.
You want to go into some of these reports from this morning? I mean, retail seems to be ground zero still. We do have a couple big retail reports. We should probably start with Kohl's here this morning. And the movement in the pre-market session is a little bit baffling because it was down, then it was up, now it's down again. I would have presumed it would have gone straight down because they cut their guidance. They cut their guidance. They lowered their expectations for the future. Their EPS guidance, they cut it by $0.50 from a low end of $7 per share to a low end of $6.45 per share.
I can't believe I had that rally. I should have been out there dumping my Kohl's, but I was busy trading other stuff. I have a small position in it. We know that. I'm a bag holder in this thing. It's in the long-term portfolio. I felt like 5% dividend, but once Target happened yesterday, it was your signal to sell all this stuff. So it's pretty much the only retailer I own. I don't know. I want some exposure there. It's it's got the wild card if somebody could come buy it still, but right now they're selling all this stuff. They have no mercy on retail right now.
Should we just call all the retail stocks Kmart?
It's a little early. It's a little early for that. I think
it's a little early. If we start seeing them all go under, I don't think that's happening. But I do think that there were some major issues here with margins getting squeezed for all these companies, and unlike Procter and Gamble, they don't have as much power to push all the prices. Yeah, they're getting squeezed. Labor's going up on them, input costs are going up, and then are people going to pay 30% more for their boots? I don't know. 30% more for their coats, for their shirts, for their clothes? I don't know. So I don't know if there is pricing power there. It's very competitive still.
I was just curious. So I went to look at the Pro because we know that Kohl's has some buyers sniffing around, and I wanted to see when do these headlines actually come out, because Kohl's in their statement in their earnings press release said that the year really started off perfectly fine for them, but it really wasn't until April that things turned. So I guess the last 2 months have been pretty bad, and that's why they're lowering their guidance for the year. So all right, they had 3 months of good, 2 months of bad.
Sure.
When do these headlines on the takeover things happen? There was a couple in January. There was a couple. I'll tell you. There was a couple in January. There was some more rumors in February and more stuff in March. But nothing. I'm seeing there's no headlines on anything really since late March. So I wonder if these rumors are these the interested parties are still interested.
Hell no.
Knowing what we know now.
No, I mean, come on. I just looked at that thing. We talked about it. It kept on getting the pops, and each pop was a little bit lower. I mean, if they buy them now, where are they going to buy them for 50? I mean, the juices. I mean, you're looking for a buyer now. That is got to be. I know when when Kramer went on that rant about AT&T, like the worst managed company in the world, and this that, and like killed it. I think I think this move by Coles has to be right up there with that. You can't look for a buyer now. I don't know. The
I don't know if
monthlies
there's a
don't
buyer
look good
coming
either.
here either.
No, who, why, when, where?
Do you
No.
think so? And again, just to go in on like who these interested buyers were, there were some rumors. It was some private equity firms, Sycamore, Hudson's Bay. Do you think they're looking at their Twitter Elon thing and saying, "Oh man, are we glad? Are we glad that Coles rejected us a few months ago?
Oh my lord.
They saved us a whole bunch of coin." Maybe that's a whole lot of Coles cash that they just saved on that deal. If they're still sniffing around, I don't know if they are. But I guess we'll find out.
It's a tough market. It's
Yeah.
a tough market to just say, okay, well, this looks good. Nothing is looking good anymore. I mean, people are saying, well, buy commodities, buy the commodity stocks. I'm going to tell you, and people don't like hearing that demand destruction, but I'm going to keep saying it. I firmly believe, and I might be wrong. We're all wrong. If I was right 100% of the time, I would be the richest man in the world, but I'm not. So I firmly believe that the commodity trade is very crowded. And I do believe if you start to see people spending less, it is going to hit the commodities as well. I believe they will get inflation in check. It's not in check yet, but I think if you're hiding in commodities, I think you are going to get hurt as well. Let's put it in perspective. They say, well, they're so cheap. They're cheap because there's elevated earnings happening here. They appear cheap. I believe they are value traps. $80 Chevron a year ago, 170. There's not a lot of years that Chevron doubled in. ExxonMobil,
Ever.
$30 to $90 in a year and a half. The stock is up 200%. Don't think you're buying these stocks cheap because you look at the PEs. The earnings are elevated because oil prices are very high right now. That may not continue. If the Fed has its way, that will not continue. And I'm not going to bet against the Fed. The Fed is winning. The Fed is causing this. The Fed needed to cause this. The inflation is the problem. They will get inflation in check. It is just going to be a painful process for everyone to deleverage or to obviously, in other cases, I don't even want to say, but I mean, there's going to be a painful process. A soft landing, I don't believe is possible. And I think you're going to see demand destruction happening here, and that eventually filters through to the commodities. Look at Nucor, NUE, down to $117. Take a good look at that Nucor chart because I think that's what your oil chart's going to look like in a couple months. Just
I
my
just want
opinion.
to, yeah, I just want to just point out something on the Exxon Mobil chart, and I talked about this I think a few other times. These institutional levels, it was 92. I mean, you don't here you got up to 92 almost and failed. Here you hit it three times in a row. Then you had two times, and then you had a breakout yesterday, right? Well, you thought you had a breakout, but that's just big size, man. That is getting out. We didn't talk about it to look at the size there. But that's just the institute. Now they're going to have to reset their like, oh, okay, well, I didn't get out of everything at 90, 92. Now I got to come down to 90. And you see that similar formation. And the other thing too is, man, we're not seeing any formations like this on the downside. We're seeing it on the upside. I mean, look at the big stocks, and there's just absolute. So to me, I mean, I guess well, now it's below that, but you're not seeing any sign of like major institutional accumulation in this. You're just seeing it on the upside. Unfortunately, that could always change.
Everything can change. The facts can change. You have to be able to change your opinion if you are a trader. If you're a long-term investor, maybe you just spy and don't look at it, and 25 years later, you're making money. But I think you've got to always be able to change your opinion. But there's so many people who cite the war. I mean, what is priced into these oil stocks, Joel? Taking it back to that. I mean, you think these things aren't up because of the war? Of course they're up. It's priced. A lot of that is priced in. And it's crowded, and people are selling other stocks and buying commodities because they think they're safe. They think they're cheap. They're shouting out from the rooftops. Chevron's got a PE of 7. Yeah, because oil's $100 a barrel. What happens if oil goes to 70? What's the PE on that thing then? Talk to me about that. Is Chevron, going back down and Exxon going back down to $30? I don't think so. They probably should have never been there. But there is, a bubble here in oil stocks, and all it takes is, if
I don't
inflation
know.
starts to get in check, then maybe it's a different story. But I think there's a bubble there, and I think that bubble's going to pop.
And then let's not forget that, like, the one thing that the oil bulls were hanging their hat on the last decade was the thing that just happened. This was the bull case always, and it
It's
happened.
all in there.
And it happened, and now we're in a way past it. In some way, not all the way. We're still in it, right? But like, this was it. It probably is not going to get that much better than this, right? This was the bull case.
It can if the war escalates. There's always a scenario.
Yes.
The war escalates. They start using chemical warfare or nuclear warfare or stuff like stuff starts to get really ugly. The war actually escalates, and it looks pretty escalated right now. I mean, I can't envision it getting worse, but it can always get worse. Then maybe, but a lot of good news for oil stocks is priced in here, and I think you're going to see people spending less money. I see the $2 per liter gas at the pumps, and I think I see the boats all getting listed. A lot less boats out in the boating area, but there's going to be people working around. It's like, I'm not going to take that road trip. I'm not going to go on that business trip. Airline prices are through the roof because of fuel. So there's going to be a little bit of demand destruction from the business traveler. I mean, it's just going to filter its way through. And don't kid yourself. There are ways that oil can come down in price, and there is a bubble there. It's just a matter of when, not if.
Let's move on to the other big report overnight, which was Cisco. So their earnings were okay. The guidance though was not great. They actually cut their guidance for the fourth quarter. That's the bad news. I guess this is what the CEO said. Okay, the CEO said that the reason that they're cutting their guidance for the fourth quarter is not a demand issue. He blamed it squarely on Shanghai lockdowns. So, if you believe that, then that's not the worst signal in the world. That's actually pretty positive because we're already coming out of the Shanghai lockdown. So that's what Cisco is blaming their lowered guidance on. If you don't believe them and you think this really is a demand issue, then that's something else entirely. But the CEO, Chuck Robbins, CEO of Cisco, he is blaming their lowered guidance on Shanghai lockdown. That's it.
I just going back one to the oil thing. A headline that came out about one this morning is that China was talking to Russia about getting oil from them. So just a little more escalation on the war thing. But the
Going to
Cisco,
yeah.
Cisco, man,
Cisco
I
kid.
own it. I don't even know where I own it at. Hopefully it's still at a profit, but that pre-market low, it got crazy, man. 39.26. It's starting to, it's had a nice rally off that low. I keep an eye on 43.40. It looks like all the freaks that bought this because it was down 15%. They're like, they don't care if Cisco ever goes back to 45. They're selling at 43.40. You would think it would thicken up here on the way back down. I was wrong on the Walmart saying the pre-market low was in. I knew Target. I had a feeling the pre-market low wasn't in. This, I kind of think, wow, you're really going to have some desperado sellers to get this back down to the pre-market low.
Yeah, I think the low is in here too. I think there's value here in Cisco, but again, it shows you nothing is safe. There's not a lot of days of Cisco, and if you look when it was $39,
it was down $9 overnight, man.
It was down 19%. I mean, there's not a lot of days that Cisco falls 19%. You can go back to the charts. These are unheard of moves. These are washout moves. Yeah. So, maybe long term, you're buying these stocks, maybe you're going to be happy. But short term, I'm like, what's next? You look at your reports and you think, okay, well, who are they going to kill next? I mean, everybody's hiding in Deere. They've all been hiding in Deere. I don't know. Could that report a miss? It's possible. I don't know what to say. I mean, it's a really tough market to come in here and just get rah bullish. And I've been, and we know I try to get bullish on Thursday, and not just getting hit.
And it had a turn.
Bot. It's hard to even keep your train of thought. I'm just like, as the market's coming in, I'm just getting bought on my arbitrage stuff. But I mean, this is tough. It's a tough market. So I think like Kramer touting Caterpillar yesterday. Buy Caterpillar. It was $214. I don't understand. I mean, if we believe, and I don't know, on one hand he's saying, we could potentially go a recession. The other hand he's saying we're buying Caterpillar. Yeah. Caterpillar is not a stock you want to own during a recession. Not at all. Major equipment does not need to be purchased. So for a lot of people, they will put off purchases of that. So if you start to see where you've got major construction starting to slow down, Caterpillar and Deere will get hit as well. So Caterpillar more so. So I don't want to own Caterpillar. I would fade Kramer on that at the 214 buy. I mean, I could see a scenario where Caterpillar could get really hit hard. So I don't think you want to hide there either. Not in Deere or Cat. What's next?
Look, realistically, not many assets are going to be safe, right? You're going to have to maybe consider if you really want to look for someone to hide, I mean, outside of cash, you can consider some alternatives. But do your homework on that. We're going to have a special show about that next week. But there's not, the bottom line is there's not much. I bonds to some extent can protect you, but only very little bit. There really
you don't go on that stable coin.
Stable coin.
Stable coins.
Whatever happened to Denny coin? Is that still a thing?
We should do that.
Which one?
Dennis is going to make his own coin. Denny coin. Wait, Joel, is there a symbol for I bonds? I have no idea. I don't think so, because you can only buy them through Treasury Direct. I have no idea. I don't know what the symbol is on those things. How do I know? Because they pay out. The payout is whatever. It's 9.5%, whatever it is for the next 6 months. That's what it is. There's no point in looking at the chart. I don't know. Okay, where was it going with that?
That's the answer. I don't know. I mean, that's the answer for everything here. It really is. I don't know either. All I know is there's a lot of, this market has traded very, very, very logical. It did not trade logical in 2020. It traded on a hot story. It now is trading on the bottom line earnings. It's trading like it should. It's trading like it's reading the tea leaves, and it's reading them correctly, that this economy is going to slow down. There is going to be, we see it, there's not a lot of people that want to buy $95,000 pickups. I know I'm like a broken record here, but why do I keep repeating the same record? Because it's working. It's working. It's keeping us out of stocks. It's keeping us with a good portion of cash. It's keeping the FOMO away, and the FOMO is your enemy right now. Eventually, it will be your friend. And, if you want to take a nibble on a stock like Target and say, well, this is just dumb, eventually it's going to bounce back, it very well might. But we've seen from these earnings reports that they seem to continue to leak. If you're buying on day one, it's usually not that great, and they usually continue to go lower. So,
I mean, Walmart proved that, right? Day one. Don't do it. Don't do it on day one. Just don't do it, right?
Look at Walmart. Look at this move, Joel, in Walmart. We need to continue to talk about these staples because these are unprecedented moves. And I mean, like in the last decade. I don't remember a move like that in Walmart. Not often. Now, do you remember a move like that in Walmart in the last 10 years? Target, that was the biggest move for Target down in 35 years or something.
It was the biggest move for Walmart since '87, man.
It's the biggest move since '87. And same thing with Target. It was the biggest move since the crash of '87. I mean, those stocks crashed in the last 2 days. This is a crash of '87 just happened to Walmart and Target. Put that in perspective. The crash of 1987, because the crash 1987, Joel, you were there, down 27%. That just happened to Target. Target just experienced the crash of 1987. That's it. You can say maybe this is capitulation, and maybe it should get some stocks, but I just think what's next?
Hey, someone just dropped us 500 DOPs. I don't know what currency that is.
That's probably like a nickel.
Hey, be nice. I don't know what currency that is.
Maybe it's a lot of money. Maybe it's 500 Bitcoins.
Tell us what a DOP is right now. But appreciate that comment. Where was I going? Okay, so it's 8:30. We're gonna have Ivan join us in 5 minutes. Let's talk. In the meantime, we just have BJ's. BJ's gave the best news possible this morning. They said We are reaffirming our guidance. The EPS beat the estimate, and we're reaffirming our guidance. Tell me the stock is at least flat.
It's up.
It's up.
Give me
It's up.
something.
You'll get a 2-3 day rally off of it, and then they'll just still come, which it always does. So I think you use rallies in any stock, including TJX from yesterday. It's holding up. I think you use your rallies to sell because in 3 days they forget about the good earnings and they start selling them again. That's what's been happening. So ugly bear market, sell rips and everything.
Oh man. Okay. Hey, you know what though? You had a good call yesterday. You said you'd sell into the open, right?
That was a $9.06 tip.
Thank you.
So Joe figured it out.
But
Yeah.
but
Take
still,
$9.
oh, it's the Dominican currency. Thank you for that.
Dominican. I'm going to go there again, Dominican Republic. I could
Send
use
me
that,
a
actually.
cigar. Don't
Send me
tell
that.
me. Yeah.
Send me a cigar. Okay.
Sugar.
Just running through things quickly. We had BJ's going through my movers tool and Benzinga Pro, looking at gainers and losers.
Well, let's go back to Cisco because there's a sympathy trade happening.
Oh yes, thank you for the reminder. Juniper Networks
hard.
Here.
Sienna. Stocks that I didn't even really realize. There was a few that I didn't even think about them with sympathy. AVGO, Broadcom, they're hitting it with sympathy on this. ANET, Arista Networks, they're hitting that with sympathy with this. I mean, they're hitting some of the cybersecurity stocks in sympathy with Cisco. It's like creating more sympathy. It's like there's a little kind of relationship there. We better hit that stock too, just in case.
And I just want to, I've done this before, but I'll show you guys again. If you want to know, how does Dennis know that? How does Dennis know that some stocks are moving off of one other stock's earnings report? We have that information in Benzinga Pro. You go to details, you search, in this case, Cisco, CSCO. You go to the little peers tab, and boom, this is every stock that's related to Cisco. You can see, okay, Cisco's down 4% this morning. Qualcomm, Arista, ANET, Nokia, Ericsson, F5 Networks, Juniper, Sienna, Lumentum, all in the red as well, off of Cisco. The rest of these have
pretty.
No trades.
Show us how to do that again.
Yeah, very easy.
Right from the beginning.
2 clicks. This is your Benzinga Pro homepage. This is the generic page that everyone gets to. You go to details. You type in your stock. In this case, it's Cisco, CSCO. You go to the peers tab right there on the top. It says peers. Bada bing, bada boom. 2 clicks and a type. That's what gets you to this page.
And that's what you get.
And that's
what you good to know right there.
Yeah, that's
good
how
stuff right there.
That's how we know
relationships make money, people. They make money. They're more powerful than any chart.
That's it. Okay, so there's really not much else as far as the earnings that interest me. Like we had Children's Place, and doesn't interest me. We had Bath and Body Works. Don't care about that.
Children's Place was an epic disaster.
It was
of an earnings report. It's not down that much.
It's come all the way back, Dennis. Look at PLC this morning. It's come all the way back.
Oh, it was an epic disaster. They're buying the dip on some of the stuff. That's good news if it holds.
How's Build-A-Bear?
How is Build-A-Bear? BBW.
Holding up.
How is that thing hold up? Who's building bears in malls?
Mall retail. I thought mall retail was
good. Who's doing that? That's unbelievable. I'm impressed with Build-A-Bear. That was a Chris Camilo pick. He got a good call on that one. Wonder if he got out.
Wow, BB. Yeah, that's a tight looking chart.
Build-A-Bear. That's what we all do in recessions. We go build teddy bears so we feel better about ourselves, and we hug the teddy bear, and we go into the fetal position.
I want to see I want to see what that inflation looks like. I do. I want to see what the Build-A-Bear inflation is. Not that I have a frame of reference for it. I don't.
Wow, their margins are so ridiculous, Spencer.
They sell.
They charge you like $30 for like $1 worth of cloth. I mean, they sell 10 bears. They pay their rent.
Yeah.
So maybe that's why it's good business. They don't have to sell very many.
Maybe.
They just get the rich kids in there building their own teddy bears.
Yeah, that's certainly it. All right. Let's bring on our first guest today. I see him backstage already, so we'll grab him here. Ivan Feinseth. He is the partner and CIO at Tigress Financial Partners. And whenever we bring Ivan on, he is nothing if not consistent.
I know. We need Ivan.
He's a bullish guy.
We like Ivan.
So, Ivan, good morning.
How are you?
We're great, but I have to know: are you still bullish? Because you've been bullish coming on this show for years.
Absolutely, but we know the market doesn't go straight up.
Right.
So, and we will, and I believe we will look back at this time, and once again, it will have been a major buying opportunity because the fear and the panic and the selling just got overdone. It's a difficult environment between the war in Ukraine, this and inflationary pressure that's been driven by the supply chain breakage due to the pandemic, the China COVID rolling lockdowns. So it's been a perfect storm, but that perfect storm creates a perfect opportunity. Um, and the fact that there's so much bad news, there's no good news. The one last bullish talking point has been the resiliency of the consumer, and I still believe the consumer is resilient. I've been traveling a lot recently. Airports are packed. Most places you go to, planes are full. They're asking people to give up their seat to try to find other planes. They don't have enough capacity to handle all the traffic. The cruise lines booking trends are strong, so consumers are spending. But this 1-2 punch with Walmart and Target is being used to negate the strong consumer bullish narrative, but I think overall consumers are still strong. You have a lot of pent up demand. You got $2.5 trillion in excess savings on consumer balance sheets and very strong corporate balance sheets. Companies are still increasing dividends. They're still raising buybacks, announcing new buybacks. So there are still a lot of bullish talking points. We just need a positive catalyst, if you will, one positive bullish catalyst to kind of reverse the selling. And I think the one pattern that we are seeing over the past couple of days is that for the past few months, when stocks sold off, bonds sold off, and rates rose. Yesterday, as stocks sold off hard, bonds rallied. So we are seeing this shift of asset allocation, looking for a safe haven. But the fact that yields could still rise slightly more on some of the treasuries, but I think we are seeing a peak in yields. The shift from Fed Chair Powell's shift from a less aggressive to an extremely more aggressive monetary policy with the goal of paring back this inflation is both difficult for the market, but I think long-term bullish. But the other key point is I don't think the Fed will have to go as far as many are predicting. I don't believe we will see more than 2 or possibly 2.5% on the Fed funds rate, whereas many are still calling for 3.5%. So I think that will end up being positive.
So what you're really saying there, Ivan, is that there will be a bottom relatively soon, because theoretically, if the Fed were to turn course again, and not necessarily lower rates, but at the very least, like as you said, not raise them as high as some think, then that would signal to the stock market that the end of that policy is here, and we can begin buying again. So that's what you're really saying, right?
Well, I'm saying higher rates are indicative of a strong economy, and a strong economy supports higher stock prices. So it's pretty much Fed Chair Powell says what he does what he says. We're probably going to be getting 2 more 50 basis point rate increases, taking the Fed funds rate to 2%. And that's still, if you look at the history of the stock market, stocks have done very well in higher Fed funds rate levels, not at extreme points, but we're just pulling out of a time of extremely artificial low interest
but
rates.
in this specific instance, I know what history says, but in this instance, they're not, right?
Well, no, we haven't gotten there yet. I mean, there are a lot of other forces that circle around. Certainly, the breakdowns in supply chains and shortages of items, things that are being caused by the supply chain issues in China and the war in Ukraine. I mean, those are just 2 very sad global situations that are weighing on the market. But eventually they will reverse too.
I can understand the long-term bullishness. I can. The short-term or intermediate-term bullishness is a little bit harder for me to see here. I know you have positive ratings on everything from General Motors to Microsoft, Qualcomm, which actually had a very good, great report actually a couple of weeks ago. But I just don't. How can you like any of this stuff for the next few weeks or few months? It's very hard.
That's you can't invest for the next few weeks or few months. You got to invest for the next few years. But I I mean, General Motors is going to evolve into be one of the world's leading EV producers, and so many with so many technologies and services surrounding EV production and the rolling out of cars. Very interesting. You take a company like Snap-on Tools, and I met with the CEO 2 weeks ago, and the story is fascinating. People say, "Oh, automobile growth is slow." I said, "Yes, but repair growth continues to increase." Said when the Snap-on just had its 100th anniversary in 2020, and when the company started, there were 7.5 million cars on the road in the U.S. Now there's 280 million cars. That's a lot of cars that need maintenance and service. And right now, the average car in America is almost 12 years old. So you're talking about the need of a lot of repair and a lot of service. And the fact that they sell tools that enable mechanics to do their job better and faster actually empowers the mechanics to. The mechanics are paid by the shop manual hour, not the clock hour. So the faster they can do their job, the more they can get paid and more work that they can do. They have some of the industry-leading diagnostic equipment, which is also important. They have the industry-leading, crash repair equipment, the Mitchell manual, and frame straighteners and lifts and wheel balancers. And so the car market, the total addressable market grows every year at about 17 or so million new cars, with a few cars obviously being replaced, but it's a tremendous growth market, and cars are increasingly more complex. I'm not only talking about traditional items that need repair, but all of these ADAS systems and sensors. So this is a great story that people really don't understand the story. And but when you think about some of these points, people have said to me, for example, all these electric cars, they're not going to need oil changes. They're not going to need a lot of repair. Well, there's a lot more sensors, a lot more motors, a lot more other systems on the car that will need maintenance and repair. So that is a growth.
I get all that. I guess what I'm trying to get you to say, and I'm unsuccessful, is thus far, is that if you're not long any of this stuff, now is not the best time to buy it. That's what
okay. That's a tough statement, though, because we won't know if it was a good time until sometime in the future.
Also true.
At some point, we will look, and this will have been the bottom. I think we are closer to a bottom. And hey, look, to quote Warren Buffett, you want to be greedy when others are fearful, and fearful when others are greedy, and people are fearful. So It's time to be greedy. Or say, well, you got to buy when there's blood in the streets. And certainly there's a lot of red. And they are just selling out at any cost, dumping stocks. Microsoft had a good quarter. Qualcomm, as you said, had a good quarter. Anytime Apple has been weak, it's been a buying opportunity. Amazon has been surprisingly weak. Yes, they're hitting the good stocks too. And I think we are closer to the bottom of this than we are to a further sell-off.
Is there anything that you straight up just don't like right now?
There's a lot of stocks I highlight that I don't like, but I prefer to focus on what I do.
What do you give us?
I want to know what you don't
like. Give us 3 picks like that, or just beat right up that you think are no-brainer buys.
I've been negative on Beyond Meat for a long time. Okay, there's no nutritional benefit and there's no caloric savings, and the sales surges in the beginning were based on curiosity of people wanting to try it out. Oatly, I was negative on Oatly. It's you can't make almond milk at home, but by the way, it's very easy to make oat milk. It's water and oats in a blender.
Okay.
So there's a lot of these niche stocks that I have been very negative on that have had a cult following that I think was misplaced. But so those are 2 that you really gotta but there's no significant proprietary value to what they do, and a lot of competition. Whereas the companies that I like to focus on, I like to highlight on their strong, defendable, competitive advantage. Excuse me, their very strong brand equity, their industry-leading technology, stuff that can't be easily duplicated or replaced.
Wait, Dennis, can you re-ask your question again?
Yeah, so give us 3 picks here that you like. 3, because people are looking. Some people have some cash. I have some cash. I'm looking to deploy some cash.
Yep.
Good companies, reasonable valuations. What do you like, Ivan?
I'm going to say Apple.
Yeah, I already own Apple.
Okay.
Give me another one.
Meta Platforms,
I already own a bit of that too. Gotta give me another one.
and General Motors.
I own a little bit of that too. He got my
Oh,
portfolio.
so you want less? Okay, hold on one second.
Keep going, Ivan. Find me somebody I don't
He's
own.
going down the list. These guys keep
I'm going to say, okay, maybe less fog. Monday.com.
No,
Whoa,
I don't own any
that's a
Mondays.
beaten
Or
down.
All
Tuesday or
right, that's a
Wednesday.
new one. Now
All
you
right,
got me.
there you go. A
You
company
got me
that
in this one. Monday. Why Monday?
All right. They are one of the leaders in no-code, low-code database and IT infrastructure development. Their customer base is growing very quickly, dramatically. They continue to add new products to their service and platform and allow businesses to very simply build out tremendous infrastructure as far as customer relationship management, all different services. Their product is basically Work OS. They are a work operating system for businesses of all sizes that can adopt their platform through low or no code programming. That would be another one. Another interesting stock, just around $2, is Iron Source. Iron Source
What's
has
the
What's
ticker?
the symbol on that one?
is IS.
IS. That's a new one.
Yeah,
Iron Source.
This one.
They have a platform that enables application game developers to basically develop games and monetize their game development on platforms through all of the cellular network providers for mobile users. So it also enables the cellular service or phone service providers to monetize the games on that platform through advertising. So they have a platform that helps both game developers, app developers, and also the platforms that they work on. So that's, it's stock that's down from probably $12 or $13 down to $2. They're profitable. Their revenue is growing. They
Profitable
have
is good.
cash flow. Monday.com, same thing, is that they are growing very strongly. They have a unique platform and a lot of market niches, and by the way, they're not only for small companies. They have a significant growth every quarter in number of companies whose billings are over 100,000 a year.
I just want to say, if I was naming my company, I definitely would not call it Monday.com because everybody hates Mondays. But Ivan Feinseth, partner and CIO at Tigress Financial Partners. You know what, Ivan, you lived up to your reputation today.
We love you, Ivan.
We do.
Yeah, I just want to show the S&P chart here, just because Ivan just moved the S&Ps during this segment. He moved the market right here. This is when Ivan started right here. This is when the interview started, and this is where we're at now. So the world listens to Ivan.
Effect.
Yes, thank you so much, Ivan. I tracked him down, and it always seems that you come on at these opportune times. So we'll be keeping an eye on you.
Guys, great to see you.
Have a good one, sir.
And hopefully next time we talk, the market will be higher.
All right.
I hope so too.
All right, guys, I tried really hard to get Ivan to come out and say, "Oh yeah, it's not looking good, Spencer," but he just wouldn't say it. He just would not say it. So, anyway, all right, it's 8:48 here. We got about 12 minutes left, and then I'll get Peter Tuchman on for a few. So, what do we got from the chat? I know I missed a lot in there. I apologize.
Chat is unruly today, man.
Chat's fired up today.
You guys are lucky that I don't have the block key, because a lot of you guys would be.
Yeah, you guys.
I don't block anyone.
I
let them all.
Up today.
Yeah, you just let them get all under your nerves.
Let's keep the. You know what? Let's say this to the chat. Chat's fired up today. Let's keep the comments on the market, please.
Yes, please.
And try to. All right. You know what? Here's one from a name that I'm not going to bother pronouncing because I'm going to butcher it. But Lightspeed, LSPD. They had earnings, I believe.
Canadian company, I believe.
This morning, Lightspeed point of sale. No, last night. No, yes, this morning. Not losing money on EPS basis, but they lost less than expected. Earnings growing year over year, sales growing year over year. Q1 sales guidance. I don't have any estimates there, so I'm not going to even give you the number. But LSPD, what do you have for us as far as levels?
Okay. These stocks, I'm going to steal from you, Joel. I'm coming in with the steal. These stocks are obviously been killed. They've been oversold. They're still oversold. It's held up well yesterday in the value bloodbath, because this is not value. The stock absolutely needs to hold its low from 2 days ago, 1951. Below 1951, I'd get the hell out. If you are long it, you can lean on that.
If the people in the company are listening to me,
Yeah.
you don't name a company Lightspeed
No,
POS.
Joel, come on.
You don't do it.
POS stands for point of sale.
Really?
This is this is an industry term. Yes.
Yeah, really. Okay.
Yeah, really. I'm
Yeah.
not making
Okay.
it up.
Yeah. Okay, Spencer. Dennis gave you a level on the downside. I'm going to give you a level on the upside, and I like this thing. If prove to me you can hold 22. That's what I would say. That's my old trick there. 3 highs at 22. Prove to me you can hold 22.
All right. What about McDonald's here? I know we talked about the staples being a this is a bit of a ground zero situation here for the whole sector. McDonald's is in that, and it's again through no fault of their own.
I was looking at this thing after the Wendy's earnings, and we talked about it, and I did an article because Wendy's has gotten whacked and stuff, and Dennis mentioned the pricing power of McDonald's, so I kind of laid off it on the short side. I mean, they're still full. I mean, the drive-through indicator is they're still full. So
packed, but they're coming for this stuff. This is a consumer
Yeah.
staple. This is a consumer staple.
Joe-
That candle's awful. Procter & Gamble scares me. Costco scares me. I think you got to sell rallies McDonald's.
Joel, there's a problem with your drive-through indicator though. Because the drive-through may be packed, but the restaurants may be empty. Because that's basically what Starbucks said. Starbucks said that their drive-throughs have never been busier, but the stores have never been
inside.
empty. Yeah, inside never been
Okay.
emptier. So
there's the reason.
So there is a
All right.
indicator. Does Dennis wear Canada Goose? Is a question from Ash Ketchum.
It's too hot. I don't like Canada geese. I hate Canada geese. They're all over my lawn all the time. I have like this pet peeve. I just absolutely hate Canada geese. They poop all over my lawn.
Well, the stock is up this morning. Again, beaten down. Actually, no, not an all-time low. Goose has not made a new all-time low yet. In these last few months.
It's up 227.
Yeah.
I tried one of those coats on. I was sweating even before I got to zip it up.
Too hot.
You don't need a coat like that.
No.
You hit $22, just under 22 in the pre-market. I'll give a little bit more room on this one when I see multiple highs in the same area. Let's see if we can. Well, first you got to take out the pre-market high at 22, and then the heavy lifting goes on at 23. I see 3-4 highs in that area.
All right. I'm trying to go fast here from the chat. A lot of tickers flying. I'll try to cover as much as I can. Square, which has been stable these past 4 days.
How much money is Jack Dorsey?
I'm interested. I'm interested in Square.
Ooh.
If you are buying it, you got to hold 78.88 though. So I don't know. I'm not buying anything right now because everything I've bought in the last few days is a disaster now. It's again same story. Exact opposite 2020. You buy a stock in 2020, 3 days later you're happy. Buy a stock in 2022, 3 days later you're sad. So I don't know what to say. The market environment is just not conducive to owning stocks here. But Square holding up well, cheap relative to itself. 78.88 is levels got to hold.
All right. Someone in the pre-market chat, JWA asked about what's up with Unity. I don't know. What's up with Unity? I haven't looked at that one for a hot second.
It's just I mean,
these all look the same.
They're all holding up. They're all the Kathy trades.
Like there's
Kathy got massacred. She bottomed on Thursday last week when we called it 10 minutes after it happened on this show.
You called it.
We called it with a tweet. We called it both places. We were right. Now the question is, does that bottom hold? Should he be selling into this? It was so far so good for all these stocks yesterday. These were not the problem yesterday. We know what the problem was yesterday. The problem yesterday was all the stuff that people have been hiding in. And they had sold this stuff to move into that other stuff. So the same people are like, oh my gosh, I sold all my growth. I put it in Procter & Gamble. And now that's getting killed. What are you doing to me? This is what the market does. Punish the maximum amount of participants. People washed out of Unity. I think Unity is holding up okay. As long you can buy any of these stocks, as long as you sell from yesterday's low, 34.94. So if you're putting them on for trades, you do not want to see them breach yesterday's lows.
And I'll just give you the for me, because this is, you don't want it to do a teledoc, right? Teledoc, we're going up after the Kathy buy, and then we come back down and make a new low.
Yeah.
And so for Unity, $40. I mean, you got to danger Real Robinson until you get back over 40. Well, 40.75 was the high from yesterday. If you feel like you missed the bottom here, 11-point move, 5.5, so 34.5, 35, and then lean if you want to, try and buy the dip here, and you believe that the 29 double bottom at 29.20 is going to hold, then look at 34.5, 35.
Quick question about from Brock on Foot Locker, and I am going to bring up the earnings calendar because we have Foot Locker
Ooh.
reporting tomorrow morning.
They kind of started this a long time ago, didn't they?
Yeah, they did. Last quarter.
Yeah, good memory.
Yep.
Phil. Wow. Yeah, because that Q. Oh yeah,
Stock just got killed, man.
it got crushed.
It was the first retailer to really get hit hard. So our expectations low enough that they can get over that hump? Maybe. But the risk reward just does not set up for any stock going in earnings, because when they pop 3 or 4%. When they drop 15, 20%.
I know. That's
so it's really tough to own any stock ahead of the report.
I would just say this chart, just looking at it, it would just totally confuse everybody if it gapped up to like 34, 35. And then it'd be in the middle of nowhere. Then there'd be gaps up on the top and gaps on the bottom. So that's not a prediction for the report. It's just a prediction that the market just does like weird things all the time and tries to confuse people as much as possible.
Market punishes the maximum.
Yeah. I mean, like right now, if this thing opened at 36, you'd be like, oh, I got to sell this at 36. And then you look at the gap up to 38 and you're like, well, I can't sell it until it fills the gap. I mean, so tough stock. I haven't bought a pair of sneakers lately, and I don't buy them at Foot Locker.
You know what looks like it wants to give back its gains is TJX from yesterday.
It did, yeah. We talked about that yesterday.
Yeah.
What doesn't? What stock? Give me an example of a stock that has gapped up on earnings. Give me an example.
Held.
I'm sure there's one out there, but I need a couple examples that has gapped up on a good earnings report and held. Visa. Awesome report, gapped up. I mean, go through the examples. Even going back to like Upstart. Remember the gap up in Upstart, not this quarter, but the last quarter? I mean, there's just been so many. There's just a bazillion examples of stocks have gapped up on earnings, and then a couple weeks later they give it back. So find me the stock that's gapped up on earnings. Take two is 1 day beyond.
I got one for you.
Two. So you need more evidence than 1 day. They're not giving it back in 1 day.
Affirm.
That's 4 days ago. That's 4 days ago, though.
Okay.
We don't have
gapped up and it hasn't puked.
But that's all because growth washed out that day. So stay away from the growth stocks 4 days ago, which is the bottom that I called. So I'm trying to go back further, more not in the last 3 days, not in the last 4 days. You can't give me take two that earnings yesterday and say, well, that held. It's 1 day later, and I'm long take two.
Hey, I hope y'all listen to me on the that AMD move the other. I was a little bit wrong on Tuesday, but on a Piper Sandler upgrade, this thing did this. I mean, come on. One close over. What did I've been saying for a long time? It got to close more. Give me a couple closes over 100. Right? Wow, that even made a new inch. That made a higher high than it did on Tuesday yesterday. You got to be kidding me! Wow. You got that one close, so let's see if we can get back and consolidate. But that's a look at AMD.
I'm going to go with Affirm as I literally cannot think of another.
You're not allowed anything from the last 5 days because growth hasn't given it back. The market hasn't.
Okay,
you got to go from over a week ago. That's the rule. So more than 7 days ago. Can have gapped because it's not enough evidence here yet. There's only
I hate
3-4 days.
Well, there were some stocks that gapped down that came back, like Chevron. I think gapped down on their report, and they came all the way back. I think that was I think that's what happened. Right?
There's not been a lot. So all I'm saying, it hasn't paid to buy the gap ups on anything.
It hasn't paid to buy the dips either.
Facebook is a good example. Facebook actually has held up somewhat okay. But again, it's starting to. Is that great? It's not like gap and go style. Tough market, man. Tough.
I guess. I guess because Facebook's low was 169. Now it's 190. So, all right. So you're still up.
What do we got?
$23.
See, like this one, you can't really. Is it going to fill the gap? It gave back over half of the move. But it's kind of
right.
hanging in there. That kind of where's half of the move come in here? That's kind of hanging in there. 194, 195. I don't know.
Chad absolutely flying with tickers here. A lot of energy names. We didn't talk about any banks. We didn't talk about the banks in a couple of days. You guys have any thoughts
Yeah.
on any of the banks,
Jeez,
any of the
man.
financials here? They're all just you go through all the big ones, right? Whether it's Citi or J.P. Morgan, they're all just kind of hanging out at in the same
At the
low
lows, I
at the
mean,
low.
yeah, they're just worried. Who cares about higher interest rates? They're
I don't
worried
know.
about no loan demand. I mean, holy mackerel! Look at Bank of
Recession is
America.
not good for banks.
Nope.
I mean, even the Warren Buffett stocks have not held up on the gaps. Look at Hewlett Packard. Oh yeah, Warren Buffett,
Yeah.
buy, gives her back. What else? He bought like other stocks, not in the last 2 days, but he bought some other stuff before too. A while
Well, he
back.
bought his big three for the last quarter. It was Hewlett Packard, it was HPQ, it was Activision, and and then he bought Allegheny, ticker Y. He's taking it over.
Well, that's takeover. Yeah.
Right. So those are the three. Oh yeah, how's Paramount doing? That had a big move on Warren.
Holding up so far, but we're 2 days from the
Okay.
event.
Okay.
So
I get it.
we still have, FOMO people that are going to hold that up for a bit.
Yeah, it's only been 2 days.
Okay, I'm gonna hop. I'm gonna let you guys finish it up. I missed a lot
Yeah.
of symbols here. I'm gonna go cover them on Pre-Market Prep Plus and Spencer
Yeah.
Triple D. I'll check in with you guys later on.
We did miss a lot of symbols. So if you don't know where to find Joel, where he's going right now, he's going over to premarketprep.com. That's where he's going. Peter Tuchman is supposed to be joining us from the floor of the New York Stock Exchange or from the balcony. Don't know where he is. So I'll just hang out for a minute or so and wait for him. And if he doesn't show up, we're going to end the show. And then I will send you over to live trading. Zunaid and Aaron Bree. We have no Mitch today. Mitch is out because Mitch is going to VCon. If you're at all into the NFT space, there's this very exclusive invite only conference that we somehow got invited to. So we decided to send Mitch and send Chris Catchy over to VCon this weekend. So that's where he is getting all up in the NFT business. And our boy Ryan Fluna is out in Arkansas. So we got Zunaid, we got Aaron Bree, and then I'm going to stop in as well, do some live training for a few minutes with you guys through the open just to hang out there. And then, yeah. Oh, one thing I forgot to mention is I'm very excited. We don't often get in office interviews on Benzinga because unless people are in Detroit or swing by Detroit in some way, shape, or form, we have an in-office guest today. If you are a football fan, you may remember the name Charlie Batch. He played about 12 years in the league. He was a quarterback for the Lions, quarterback for the Steelers. Anyway, Charlie Batch is now a cannabis investor. We're going to interview him live in office today at 4 o'clock Eastern, right here on our YouTube channel, all about his career and also his life as an investor and why he is so bullish cannabis. So I'm very excited for that. Here's a quick trailer. So again, it'll be 4 p.m. Eastern time, right after at the close. I'm very hyped for that. So, and I'll be there as well. So catch me there. And all right, looks like Peter is too busy. Maybe this is a bullish indicator that he's too busy, or maybe it's bearish, and I don't know, that he's too busy down on the floor, which is fine. That's what happens. So I'm gonna end this show right now, and we're gonna send you over to live trading. Before I go, couple quick announcements. First off, there's a link in the description to our brand new redesigned pre-market page on benzinga.com. It's benzinga.com/pre-market. Okay, have you seen that page? It's got this show. This show is on there. You can watch our show on that page. It's got movers, gainers, losers, ratings, earnings, everything you need to know to start your day is on this page. That's the first thing. Second thing is I haven't given this announcement in a while, but Benzinga, as we grow, we attract more and more attention, and that includes more and more scammers trying to scam you. So if you see any fake Benzinga or anybody posing as Benzinga, like in your DMs, like we're never going to DM you asking for money. I think that should be clear, right? So if you see anything like that out in the wild, please email us, scamreports@benzinga.com. We probably get a few of these a week, but if you see something, say something, and we will take care of it. But know that we will never DM you asking for money. That's not how legitimate business operates. Last thing, again, Benzinga Pro. Check it out. Free 2 weeks for everyone. Pro.benzinga.com. There is a link in the description to get 25% off your Benzinga Pro subscription. So do that if you want to check it out. And that's what I've got. Catching up on the chat. Yes, way, low budget crypto washing. Charlie Batch, the man himself, in office today. All right. I think I'm done. Scrolling. Brittany keeps spamming this one ticker, DRCT, that I don't know, but it's $1. So hey, it's a call option. What you lose is $1.69. All right. I'm going to hop off here. Please remember all the information from our show meant to be used as informational purposes, not for investing or trading advice. Thanks to our guest, Ivan Feinseth. Thanks to all of you for watching on YouTube, on Twitch, on Twitter, on Facebook. We appreciate that. Going to end the stream now, send you over to live trading. We'll start that up in a couple minutes, and see you there.